Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, December 8th. It is late. It is 7:13 in the morning as I'm starting the video. So just go ahead and apologize for this getting to you late. Don't forget to run your player at 1.25 to 1.5x for maximum efficiency. We're green this morning, not a lot, about 0.25%. I'm going to skip all the, for the sake of time, running down all the futures. Looking on the macro front today, not a lot on the board. There is a 10-year bond auction at 1 p.m. Tomorrow we have a 30-year auction at 1 p.m. And then Friday, one thing I neglected to point out when I sent yesterday's note talking about future uncertainty, there's a CPI print on Friday that'll be, more or less an inflation print, and that'll come on the Friday before the FOMC rate announcement on Wednesday. So, when we go to the charts, looking at the VIX, we were way extended. What was that? Last Friday, where we reached up to 35 on the VIX and then closed below. And then Monday, we had a pullback into the low to mid 27 range. And then yesterday, we had a big gap down in volatility as a short covering rally ensued across the markets. So what I want you to do is, if you're tracking VIX, keep this gap, the overhead gap, in mind. The reason I say that is because if you look back in the charts, VIX is like anything else, gaps get filled, and we could have a scenario. I'm just laying out a potential scenario. Say markets are more or less calm to green today and tomorrow, keeping VIX down in the low 20 range, and then some kind of an inflation print Friday morning that would shoot VIX back up to fill this gap ahead of the Fed. Or if CPI doesn't do the trick, as far as what I mean by a trick is come up to fill this gap, then we'd have this gap remaining for Jay Powell. And it wouldn't take much, for instance, if Jay Powell comes out with something that the market doesn't like, get a quick spike up to fill this gap and then come down again. So just be aware that it's there and something that will eventually get filled. We just, like anything else, we don't know when. But, in this environment with a couple of major uncertainties ahead of us, I wouldn't be surprised if that is filled sooner rather than later. Quickly looking at the NYMO oscillator, we had gotten oversold down here at minus 90. And then we had the fire out of the hole from oversold conditions. And one of the things I was just goofing around talking about it and thinking about it this morning, new investment strategy. What happens if you had a full-time job, you're trying to battle the markets on a daily basis, you really don't have the time, blah blah blah. What if you just sat there, with either your shopping list or on the indexes and just waited for these oversold conditions, along the lines of where, we've been saying it for years. This NYMO and NAMO oversold is gold. At least it has been for, the 10 years that I've been watching it. It just does not fail. You may get a situation where you've got a waterfall COVID event, but hopefully you'd have the awareness to realize that. But in these sell-offs, barring a waterfall, the rubber band just doesn't stretch any further. And so you sit there and bide your time. You're piling up cash, in your account. You're not really doing a whole lot, a low intensity approach. And then when you get the oversold reading, you hit it with everything you got, with leverage out in time that would give, if this thing's going to go from minus 90 to minus 110, it can do that. So you don't want to be, buying calls for Friday, but you go out 6-8 weeks and you may experience a little drawdown, but that thing is going to fire out of the hole. And we've seen that just so many times before. So now that's just an idea for you. Anyways, we're back up in the middle of the range. And so the NIMO and NAMO has done its job. It gave you the signal to look for the bounce. There's always fear down there. Oh my God, a 50-day test. If this breaks, it's gone, all that kind of stuff. But once it gets down here, it just does not lie. It says get long. A rip is coming, and that's exactly what we got. Moving ahead to the indexes quickly. SPY 2-hour. We did not fill the gap yesterday. We had a reach. We had a try for it. I think today you just key off of yesterday's high, whether you want to call that 368 and a half or whatever, or if you want to go off the top of the gap, that's fine as well. Once you get that, if the pre-market action holds, we will have a little gap below price again, and you recycle those rules. You set a stop at the top of the morning gap, and if it rolls over and penetrates that level, that is your signal to be out of your longs. See a little more granular resolution here on the 30-minute chart. You see that it ran into trouble at this high volume over price bar, found resistance here, 368.50-ish. And so now we've got the top of the gap from back in time right here, 469.25. You can see that I've marked in the gap from yesterday. So if there is a moment where you get a COVID headline, you get a nasty inflation print, you see things start rolling over, just like we showed here on these sell locations. If this rolls over, you break the bottom of this gap, that's a sell. You go down here and roll into this gap, another sell. And then you're down here, you break the bottom of this gap, it's another sell. So if this thing, cascades or however you might want to describe it, you can use these levels on the way down, just as I pointed out here, back in time. Use that same idea on the way down, and just like you roll up your strikes on the way up, you roll your strikes down as levels fail. That way you're harvesting profits all along the way on this down move. Now, if you're long and you get that, another impulsive move higher, and you held your position overnight, you can move your strikes up right away and scrape off that morning win. You'll have some money in the bank already. You can stay long and then look for a move higher if that's the way we want to go. Q's 2 hour, same exact idea. Here's the morning gap from yesterday. There is no overhead gap in this situation. You can toggle right off at 398. Our first big level is 401. Why? Because we had this line of resistance right here where we had 4 or 5 candles reach up to 401 and get rejected. And that was, of course, also a location for this big breakdown candle high, which we always say on the way back up, find those breakdown candle highs, and that will be a technical accomplishment for the bulls, if you will. Recovering that high at 401 would be really bullish. Here's some granularity on the 30-minute chart. Just, a little bit finer look, and you can see that 401 line right here. That'll be the first major level this morning. And so if we gap up to 401 and you see that it can't get through, it would be very objective there to take a tactical short with a stop just above and play for a morning gap fill of the open. And you would have, 401 down to 398, a quick $3, 2 or 3 5-minute bars. They flash it down, fill that gap, and then reverse. We're always ready for that trade, right? IWM 2 hour came right up to the breakdown area at 226, and then you've got a big gap above to fill. So if you had gotten long down in here or prior to yesterday, you got this move up. Here's a place where you can scrape off the profits and then look to re-enter long if and when price enters this gap. And then your first area of resistance is going to be the 50-day right here at 227.50. Here it is, just a little more granular on the 30-minute chart. You can see right here. I mean, it's pretty apparent if you look at lower time frames where you get this, multi-hour can't get through. That's always a clue that, there's some solid resistance there, and you may not want to, just stick in a long or stick with your long at that time, especially if you're a short-term active trader. When you see that obvious stall, you can take your position off, book your profits, and then you can say to yourself, okay, if I break out of this flag, I want to get long. Or you could say to yourself, I don't want to get trapped right here below the gap. I'll give up this 1.5, make sure we're in the gap, then I'll get long, and I'll look for a $5 gap fill, whatever this measures out to be. It looks like $5. Facebook, V bottom off the low, came up here, had a little weakness in the afternoon. I think this is a simple setup. That doesn't mean an easy trade. I mean that clearly 324 is your pivot. And so I think you can be long against that. And then you've got the morning gap from yesterday shown right here. So be aware of that. Apple just keeps on going. Really, really strong. I've done, just added a couple things. I hope it adds value and isn't confusing. But here you've got, a big move up and then a flag. And then the flag comes down. You get another gap up and then another flag. And all I've done is kind of project these bull flag measured moves that point direction and gives you a general target. They may or may not work out to the penny, but for instance here you get a break above the all-time high of yesterday at 171.50, then your bull flag measured move points up to 177. So that gives you an idea of what you're shooting for as far as an upside target. And I put this here, one of the biggest trades I've personally seen on an individual name. Some guy went out to March 200 calls and bought over 30,000 of those. One shot, one block, mega trade. I actually think it was closer to between 31 and 35,000. I've got a couple of different option screeners that saw it as different values, which is a little strange, but whether it was 30,000 or 32,000, it really doesn't matter. Huge trade. But always keep in mind when you see these call outs on trades like this, it could be a massive institutional trade of switching out common for the options. And I'm not saying it is or it isn't. All I'm saying is it could be. If someone's sitting there with millions and millions of shares of Apple, and they say, you know what, we got Jay Powell coming up, we're a little unsure, blah, blah, blah. Let's stay long, but with options rather than the common. So whether that was just an outright bullish bet or an institution taking some common shares off and putting options on, it could be that as well. But you've got some very clear lines here to shoot against. Tesla, just use this 1050 as your pivot. I see the first overhead resistance right here at 1080. These numbers, these levels just keep repeating and repeating, whether they're going down or going up. That's why when you look at what I'm doing, there'll be little tweaks here and there, these levels, but by and large, once you get them right, they can guide you on the way down and then guide you on the way back up, because broken support becomes resistance. So this 1080 will be a big line in the sand or a big hurdle for Tesla to break through on the upside. And remember, just like we always talk about, you could get a breakdown and a back test, and then things get squirrely again at 1080. You will know that, hey, that's a big level. That is a big level there at 1080 because of all these reactions along that line. The more reactions along that line, the more strength that support and resistance will be. Both on the downside, you can see how many hours were spent here hesitating. Price knows these levels. That's the muscle memory. And now, since it broke, there'll be muscle memory on the way back up. That price will likely hesitate at this level to a certain degree and then decide whether to break out or roll back down. Microsoft 60-minute gap up and flag. If you were not in it, you had a nice opportunity late in the day yesterday on this big reach back to 332. That was a pretty objective place if you were looking for a long to give it a shot, that worked out well. Now, this morning, I think you've got this 336 as a level of overhead resistance. You see the large volume over price bar here. There'll be some resistance at 336, and then a big level, big level is 338. Why? Because rejection, 3 or 4 rejections, couple rejections. Price will have muscle memory at 338 as well. And so if you get a breakout from that level and you had been long all this time, that would certainly be a place where I would roll up my strikes, go out in time, buy some more time, and then see if we don't go right back up towards the highs. Amazon, same kind of idea. I would just use this 35, really about 35 as your pivot level. Break above that, I would expect a rather quick move up to 3,600, and then that'll be your next big level in the charts because of all these rejections right here, and you had rejections back here as well. So 3,600 is a big line for Amazon. Moving on to Google, gap up, flag. You get a breakout of 29.50. I think I would buy it there and then look for a move up towards 29.80 and then back to 3,000. So really bullish price action in Google. Netflix has been dogging it a little bit, not as impulsive as some of the other fat man names, but it's still trying to make a move. I think you can be long against this 622.50 area and then look for a breakout above the old gap. There may be some hesitation right here at 632, something like that at the top of this old gap. But then you break above that, I would expect a move back to 645, and that would be a big area of muscle memory resistance. There was hesitation in here, support. So now that's resistance. And if there was going to be a place for some kind of a rollover and breakdown, I think it would be right here at 645. That would give the breakdown, back test, rollover, and fail look. So if you're any kind of a Netflix trader, you can make that a relatively important line on your chart. And even if you're a bull, right? And you're not in, if you got a move up here to 645 and then you see a breakout, then that will be a nice place for a longer duration long with a stop just below 645, because that will be a big hurdle, and then you can camp out long against that big support level once it is recaptured. SMH. I didn't have that updated. Let me do that. I'm sorry about that. Forgot about it. Yeah. Now, obviously, these pivot points are wrong, but big gap up and follow through. Semis have been a lot stronger, generally speaking, than the rest of the market. I mean, we had a pullback, but we didn't fall apart. We pulled back to a marked level on the chart. We filled a gap down here, if you'll remember. that I've since taken off. And then we've got this V bottom. And now we're back up towards the all-time highs at 314.50. So now above that, you can use 314.50 as your pivot, and then look for 318, which is the all-time high. And again, if, say, you're not in, you can alarm that level and say, you know what? Into year end, we break out above 318. I can get long against the prior all-time high. Look for a Santa rally into the new year, and you can be long against the all-time high. So that is a way to think about that. No natural sellers, right? That's why I say, anyways, all-time buys, all-time highs, you got to buy. There's no, anybody that ever bought SMH is profitable. So why sell? The way I look at it. So from then on, you can just ratchet up your stops and your strikes as you would on any stock, heading into the new year. If we get some kind of a rip after Jay Powell's FOMC announcement, he may come out with something that the market really likes, or he may come out with something that is already baked in to the price. For instance, this last bout of volatility we had, maybe the market has already figured out, okay, well, he's going to do an accelerated taper. We'll deal with that. And it looks like, excuse me, the new COVID variant's a big head fake. So that's been already taken care of. So maybe the path clears after Powell for a run into the new year, that chase for performance from everybody, right? Self-fulfilling prophecy. So apologies for the video being late. I hope the levels helped. If you're new here and you like the analysis, please hit the subscribe button and the alarm bell. It'd be great to have you be part of the team. Look over in the show notes. There's a link to the website where you can register for all my content, and we would love to have you join the team. If you register, you'll get all my content right to your email box. You won't have to go hunting for it. And then you'll also get an invite to our trading room. We've had quite a number of new participants in the room, and I always like to see that. Keeps the group really vibrant. It's always good to have new eyes looking at different trades, different setups all day long. It's quite beneficial. So if you're interested in that, please sign up, and I'll send you an invite link. To the rest of you, thanks so much for your support. I hope your trading's going well. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.